Welcome back to Investing Academy. Today's video is one of the most important and most requested topics on this channel: how to start investing in the US stock market in 2025 step by step with zero confusion. Whether you live in the USA or you're watching from another country, this guide will help you understand everything from choosing a brokerage, opening an account, understanding ETFs, picking your first stocks, setting goals, managing risk, and building long-term wealth. This is a complete beginner to advanced full masterclass, so grab a notebook because we're going deep. Why you must start investing in 2025. 2025 is not just another year, it's a turning point. The US stock market is in a unique position. Inflation is cooling down faster than expected, the Federal Reserve may start cutting interest rates, corporate earnings are starting to grow, AI, automation, and clean energy are entering new phases. New investors are entering the market at record speed, but the most important reason: the earlier you start, the bigger your compounding effect. Imagine two people. Person A starts investing at 25, person B starts at 35. Both invest $300 per month with 8% annual return. At 65, person A ends with $742,000. Person B ends with $338,000. Same monthly amount. 10-year difference, more than double the results. This is why 2025 is the perfect year to begin. Understanding how the US stock market works. Before you start investing, you must understand the basics. The US market contains three major exchanges. 1. NYSE, New York Stock Exchange. 2. NASDAQ, tech-heavy exchange. 3. Amex, smaller companies. They are regulated, stable, and globally trusted. There are four major asset types you can invest in. 1. Stocks, a piece of ownership in a company. 2. ETFs, baskets of stocks, lower risk, ideal for beginners. Examples: S&P 500 ETF, VOO/SPY/IVV. NASDAQ ETF, QQQ. Total Market ETF, VTI. 3. Bonds, loaning money to governments or companies. 4. REITs, real estate investments without owning property. Understanding this is the foundation of smart investing. Setting your financial goals. Never invest blindly. Always invest with a purpose. Ask yourself, am I investing for retirement? Am I investing for financial freedom? Am I investing to save money for 10+ years? Do I want high growth or stable growth? Do I want dividends? These answers define your entire strategy. There are three types of investors. 1. Conservative, low risk, prefer bonds plus large ETFs. Goal: capital preservation. 2. Moderate, some risk, ETFs plus top companies. Goal: steady growth. 3. Aggressive, high risk, tech stocks plus innovation. Goal: maximum return. Most beginners should start moderate. Picking your brokerage in 2025. To invest in the US market, you need a brokerage account. If you live in the US, best options include Fidelity, Charles Schwab, Vanguard, Robinhood, easy for beginners but limited research tools.
If you live outside the US, Interactive Brokers, best global platform. eToro, copy trading option. TD Ameritrade, available in many countries. Binance stock tokens, only for fractional exposure. When choosing a brokerage, check zero commission trading, easy deposits or withdrawals, fractional share support, good mobile app, good customer support, low FX conversion fees. Opening your brokerage account. Most brokerages require ID or passport, proof of address, possibly tax information, W-8 for non-US residents. The process: 1. Create account. 2. Submit ID. 3. Verify. 4. Connect bank. 5. Deposit money. Usually takes 24 to 72 hours. How much money do you need? Here's the truth. You can start investing with $1, thanks to fractional shares. But the real question is, how much should you invest monthly? For long-term growth, $100 a month, good. $300 a month, strong. $500 a month, excellent. $1,000 a month, life-changing. The key is consistency. Invest every month regardless of market conditions. Beginner mistakes you must avoid. Most beginners lose money for the same reasons. 1. Trying to get rich fast. Investing is slow. Trading is risky. 2. Following hype. If everyone is talking about a stock, you're probably too late. 3. Not diversifying. One stock can fail. A 500-company ETF cannot. 4. Panic selling. Market drops are normal. Stay invested. 5. Putting all money at once. Use DCA strategy, dollar cost averaging. Understanding ETFs. ETFs are the easiest and safest way to start investing. Top ETFs for beginners. 1. S&P 500 VOO/SPY/IVV includes 500 best U.S. companies. Average 10% annual return for 50 years. 2. Total Market VTI covers the entire U.S. market, 4,000 companies. 3. NASDAQ 100 QQQ tech-focused. Apple, Microsoft, Amazon. Higher growth, slightly higher risk. 4. Dividend ETF VIG/SCHD for monthly or quarterly income. 5. International ETF VXUS to diversify outside the U.S. Investors in 2025 should aim for 70 to 100% ETF exposure when beginning. Investing strategy for beginners. Here is a simple, powerful strategy that works for millions. Strategy: the 3 ETF wealth formula. 1. VOO/SPY 40%. S&P 500. 2. VTI 40%. Entire U.S. market. 3. VXUS 20%. International diversification. You can start with even just one ETF like VOO. Add funds monthly. Never sell unless necessary. Researching stocks like a professional.
Stock picking is optional, but if you want to learn, here are the 6 key research metrics. 1. Revenue growth. Is the company growing every year? 2. Profit margin. Is it efficient? 3. Debt levels. Too much debt equals risky. 4. PE ratio. Is it overpriced? 5. Future outlook. Is the industry growing? 6. Competitive advantage. Does it have brand power or patents? Best stocks for beginners in 2025. These are stable, long-term companies. 1. Apple. Strong brand, consistent revenue. 2. Microsoft. Leader in cloud plus AI. 3. Amazon. E-commerce plus AWS. Powerhouse. 4. Google. Advertising plus cloud plus AI. 5. Berkshire Hathaway. BRKB. Warren Buffett's company. 6. Tesla. Riskier, high growth potential. Always research before buying. How to build a long-term wealth portfolio. Here is a recommended beginner portfolio. Option A, 100% ETF portfolio. Safest. 60% VOO, 20% QQQ, 20% VXUS. Option B, mixed portfolio. 70% ETFs, 30% individual stocks. Option C, dividend portfolio. 50% SCHD, 30% VOO, 20% selected dividend stocks. Choose one based on your goals.
Golden rules. Never invest money you need in 2 years. Don't use credit or loans. Keep emergency savings. Diversify across industries. Review portfolio every 6 months. Don't chase hype. Taxes for investors. Taxes depend on whether you're a U.S. resident or not. For U.S. residents, short-term gains are taxed as income. Long-term gains are lower tax. Dividends are taxed yearly. For non-U.S. residents, no capital gains tax in most cases. Dividends incur 30% tax or lower with tax treaties. Always follow your local tax laws. The power of automation. Use automatic investing features. Auto deposit, auto buy, auto dividend reinvesting, or DRIP. This removes emotion and ensures long-term success. What to expect in the next 10 years? Experts believe that AI will become the biggest sector. Cloud computing will continue dominating. Clean energy will expand. Robotics and automation will grow. Semiconductor demand will explode. Digital payments will replace cash. Investing now means you benefit from these waves. Final blueprint for beginners. Here is the entire process compressed. 1. Choose a brokerage. 2. Open your account. 3. Deposit monthly. 4. Buy ETFs. 5. Hold long-term. 6. Don't panic sell. 7. Keep learning. 8. Let compounding build your wealth. That's it. If you watched until the end, you're serious about building wealth. 2025 can be your turning point. Start today, stay consistent, and let time do the work. If you want more detailed lessons, subscribe to Investing Academy and comment below what video you want next. Thanks for watching. See you in the next one.